Hey everyone, welcome back. With 45 days left to go in the year, I wanted to remind all of you to subscribe and to buy my book because by subscribing, you'll get access to everything we're going to talk about today and going forward. But by buying the book, you'll get some insight into how to screen for different stocks and how to do it potentially yourself, or at least ask informed decisions of your investment advisor. Today I want to talk to you about value investing, what it is and what it isn't. Value investing isn't just about buying low multiple stocks, especially now. Buying something at a low PE doesn't necessarily mean that it's cheap. There are companies that are trading at low multiples of earnings that are deservedly there because their earnings power is being diminished. Value is really about buying high quality or good quality companies at good prices. In other words, you're buying a 50-cent dollar, or even better, 50 cents, 30 cents, 10-cent dollars. They're out there. They're out there when you are able to determine that the fundamentals are either growing or improving in some way that the market is missing, right? The low multiple is being accorded not because the stock is or the company is in bad shape, but actually because people misperceive that, and they're putting a low multiple there and not paying attention to the right fundamentals. What I have here for you is a hypothetical portfolio to show you the power of investing over the long term, and also identifying value stocks, things that are versus the future inexpensive, right? As Buffett has said, value and growth are joined at the hip. So ultimately, you're buying good growth over time at a reasonable price. You're buying something that others are missing. If you put $10,000 in the market or into specific stock that compounds at 15% a year for the next 20 years, simplistically speaking, you're going to make about 16.3 times your money. So 10,000 put away at a 15% rate, you will earn $163,000. 20%, the same $10,000 grows 38.3 times, gets you to $383,000 just above. And if you're lucky enough to find either a market or a stock that compounds at 25% over the next 20 years, it's just pure math, $867,000. What is the likelihood of finding companies like this? Well, I did a basic screen to see what kind of companies right now in a universe of U.S. stocks. This is a broad universe. How many of those have compounded at 15% a year, such that if you put $10,000 to work, didn't touch it, put it in the proverbial coffee can, you could get to $163,000. There were 223 of those in that universe of U.S. stocks. So you go in a time machine back 20 years, you could have found 223 different stocks that would have gotten you to that point. Again, you would have had to identify them out of 8,000 plus stocks out there, and you would have had to hold on to them. You would have made this kind of return. Again, hypothetically speaking, what do we get if we increase the criteria to 20% such that we make $383,000? There were still 53 stocks out there in the broad universe. And to get to that $867,000, there were 16 such stocks. Now, in the next row, I narrow it down to S&P 1500 stocks. These are basically the S&P 500 plus the next 1,000. These are 1,500 largest cap stocks. You would have been able to identify, there's 164 there that have made it such that they've compounded at 15%. That's still a decent sized universe, right? It is doable to turn 10 grand into 163 grand. There was still 39 that got you to $383,000. Okay, so not bad. 13 are sitting there right now that have compounded to get you to $867,000. So if you found that magic 13 out of 1,500, you would have gotten yourself a 25% return. Any one of those 13, right? You could have bought a basket of 13 and just held on. This is the S&P 500. 92 stocks in the S&P 500 have compounded to 15% rate to get you $163,000. There's 92 stocks there. That's like 18%, for those of you paying attention, of the S&P 500 has compounded at 15% over the past 20 years. It's been a good 20 years, but remember, the financial crisis of 2008 was in there, as well as the drawdown in 2020 due to COVID. You want to get 20%, there's 22 stocks that have gotten you there. So you could have picked a basket of 22 stocks, put them in a coffee can or any one of those 22 stocks, and you would have gotten 38 times your money from 2004 November to now. And there's 8 stocks that have compounded at 25%. So they're there. And you could have found those 8 stocks, $867,000 out of $10,000, right? Now, again, divide by 10, right? Just say you want to put $1,000 to work for a young graduate friend of yours, right? A kid coming out of school, you want to give them $1,000 to get started. And they can go and identify these, and over the next 20 years, right, looking forward, if they're able to identify this basket of stocks, they'll still have $16,000, $38,000, or $86,000. You can't go in a time machine. That's the only problem we have. I'll leave you with that, though. This is the magic of compounding, right? 20% return. There's enough of a universe out there at any given point, right? I took just a 20-year-ago point that got you to these numbers. It was a combination, we'll talk later of what these stocks were, but a combination of good price and quality. Thanks for joining.